Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. Today is the 16th of December 2013, and the time in London is 14:50 p.m. in New York 9:50 a.m. Happy trading to you all. The title of this video is how to trade the trading volume like God. All right. When we are talking about God, we are talking about, if we say trading like God, we mean trading with certainty, meaning that trading like the experts, okay, trading accurately, consistently. That's the meaning of trading like God, all right, which means that you will be making less mistakes, all right, and you will be achieving a more profitable trade. You understand the price, you understand the indicators, you understand, okay, the market and the market participant. This is about, when we are talking about trading like God, we are talking about a multi-talented trading, which means you see everything clearly. If you are using the volume, you do not forget, okay, the Fibonacci pattern, you do not forget Elliott wave. You understand clearly, okay, what is taking place. That's why we give this title, How to Trade the Trading Volume Like God. Let's get started, all right? Few years ago, when I started trading first, all right, one of the trading indicator that I find very difficult to understand is the trading volume. And I understand that a lot of traders are in the same situation today. They don't understand the trading volume and they don't know how to trade it. All right, but it's very simple. All right, as I explained to traders in a previous video that I posted on YouTube. All right, by Joe Trio. All right, I have explained to traders that when we talk about trading volume, we are talking about the selling activity plus, okay, the buying activity. So if we buy 100 shares and we sell, okay, 200 shares, the total trading volume, okay, is 300, so 100 plus 200. So when we see a tall candle like this, as you can see, a tall volume bar like this, all right, this is 0.9,900,000, okay, share has been traded for McDonald's stock. We are looking at McDonald's stock, American stock, okay, listed on the Dow Jones. You can see here, 900,000 shares has been traded. This is the trading volume. This is, though it's this red volume bar, this does not mean that it's a sell volume, all right? It's the combination of the selling and the buying activity, all right? And I want to show you here, okay, how you can use the trading volume like God and understand it clearly like professional and use it day in, day out with your trading tools, all right? So what's happening here? We can see that, okay, on the 12th of December here, 12th of December, as the market is about to close on the 12th of December, just the last candle here, we will see very often when the market is about to close, you will see sometimes a surge in trading volume. What do I mean by a surge in trading volume? A volume that is above, okay, average, all right? See here, I have a moving average 20, moving average 50 for my volume bar. That's the blue line here. So you can see that it's above it, big time, above all the volume. You see here, the average volume stops at this level of, okay, all right, 430,000, all right. Suddenly we see this a surge in trading volume above average trading volume here, which is a big size volume bar, okay. This is what you are looking for, all right. Do not pay attention too much to every volume. What I want you to pay attention to is the surge in trading volume. So in order to trade, okay, the trading volume like God, you are looking consistently for the surge in trading volume. When the professional see, okay, a surge in trading volume, okay, they become very, very alerted, okay. They start paying attention closely because somebody somewhere is either buying the share big time or is selling the share big time, all right. Now, this strategy I'm using here on a 30-minute chart, we can apply the same strategy on a daily chart using a multiple time frame trading method. We can use the same strategy on a weekly chart, looking for a surge in trading volume on a weekly chart, on a monthly chart, on a quarterly chart, on a yearly chart, okay, and then we will apply what we call a top-down trading method or a multiple time frame trading method. So as a day trader, I'm on a 30-minute chart because the market is open. I'm checking on a 30-minute chart whether we have a surge in trading volume. So the last candle that is very interesting to me is this candle here. So how do you handle that? All right. Now, one thing I need to mention to traders, because I explained to you that when we are talking about trading like gods, all right, we are talking about a multi-talented trading. So you do not want to violate the market patterns, you do not want to violate the market principle, and you want to use a multiple time frame trading method. I will not go into this because I've been talking about it the whole year on YouTube, Joe Trio channel, Day Pro Trader channel, 2-4 Elliott Wave channel. All right, so check it out, okay? So this is a surge in trading volume. But how do we do that? You have to know how to do it, okay? So which candle? This candle here. So this candle is the candle that we must watch and pay attention to. Very simple, as I explained to traders. We will highlight the high, okay, of that candle. You see the candle? This one here. The small size one here. We highlight the high, okay, and we will also highlight the low of that candle. Very simple, okay? It's not easy because it's a small size candle here. Are you paying attention? All right. As always, when you learn something on YouTube, do not just go and start applying it. Test it first. This is what the hedge funds are doing. This is what the banks are doing. They will test it and see whether it's a viable trading system, whether it's suitable to your trading style, all right, without getting too emotional about it, all right. You stay focused. You want to do it, and you want to do it properly like a soldier, all right. All right. If you are in the Navy, you will go through a tough trading, because during the war, you will be defending yourself. The same strategy applies for traders. Trading is a lonely game, all right? And you are on your own, all right? You're on your own with your own money, your own trading account, and you will make a decision whether you want to take the trade, exit the trade, or reduce the losses, all right? Or move your stop loss to break even, whether you want to use option, binary betting, spread betting, CFD. That's your decision. Whether you want to trade, okay, forex, stock, commodity, that's your decision. So you want to know what is working for you, so you can, okay, become expert in it and trade it like God. All right, you understand? So we highlight the high and the low of that candle. Very important for us. So in fact, because we see that there's a surge in the volume, we don't know whether they are buying or selling. In fact, we don't want to know whether they are buying or selling. Or better, we don't want to assume that this stock candle here, these are sellers, or we don't want to assume that this volume bar, these are buyers. The high and the low of that candle, that's what we are watching. If they are buyers, what will happen? The price will start displaying higher lows and higher high. And the price, the number one indicator, it will not hide it. It will show to you that, okay, I'm going up, okay, I'm going down. If it's going down, it will display lower lows, lower high. But now we are on a 30-minute chart. We will maybe go to the 3-minute chart, 5-minute chart, 2-minute chart for our entry time frame, draw in, okay, the channel. This is about the market patterns. As I explained to you, okay, trading like gods, it's about being a multi-talented trader, all right? So here we see a surge in trading volume. Why people are buying at this price level? So somebody, now if the price goes above, okay, the high of this candle, the next question is, why are they buying? Is there a value? Now, the smart money will always buy at the best price where there is a value. Why are they buying? So this is about being a little bit curious. So we will go to the higher time frames, all right? We will also go to Google Finance, okay? We'll go to Yahoo Finance, dig in, all right? You understand? Go to the fundamental, all right? The short and them, okay? And the current liability, okay? and check what's going on, all right? The cash flow, the sale, what's going on? Innovation, product. Check the news at least, okay? At Google Finance, Yahoo Finance, check the economy news relating to the financials, this McDonald's stock, okay? What time of the year are we now? Okay, so you play the game, all right? It's not sufficient to see here, okay, a tall volume bar on the 30-minute chart, and just from the 30-minute chart, you don't want to know what is happening on the higher time frame, and you don't want to know what's happening with the fundamental. That method of trading is gone. Because why? Because there are different type of market participants, very, very smart, talking about the high frequency traders that are taking the trade very fast. They are employing traders that are thinking very, very fast, very, very smart traders, very fast thinking smart traders. They are using computers that are very, very fast with powerful algorithms. We also have the hedge funds that are using the fundamental to make long-term decisions and short-term decisions. And the old way of using the technical alone is gone, all right? I think the traders love the technical, and they want to use the technical alone. My approach is that one should combine, okay, the technical and the fundamental. So now we see that the price goes above the high of that candle. It's pointing, the first thing that's coming to my mind, this volume bar, the majority of traders here were buying, okay? So if it goes above it and find a support, it's telling me that this volume, tall volume bar, these are buyers. On the other hand, if I see a tall volume bar like this, the price D below the low of the candle that I have highlighted here, it's telling me that these are the majority of the trading activity here, okay, or this trading volume is very bearish. As you can see on this chart, on the 12th of December 2013, all right? Okay, are you with me? Are you following me, all right? So, now the price went above it, okay, on the 12th, and stay above it. So, in fact, this is not too bad. There was a low here. This is the lowest low, looking at the price on the left-hand side. It's the lowest low on the 30-minute chart. Now, the price is not displaying a new lower low. Look what's happened today. Today the price gap up. Very interesting. So you see, very simple. One can understand that these traders here, these are buyers because we stay above the high of this candle. Is that difficult? Now, if you have any comment, put below that video. If you are TSTW trader, okay, contact me. And if you have more questions, ask me. One can go from the weekly chart. One can go from the daily chart, quarterly chart, using the same strategy. It makes sense? It's also powerful, okay? Let's move on. My apology for my telephone that is ringing now. I hope you can hear it. So you see here? So from this point onwards, now the price, you see today gap up. So let's go, for instance, to the lower time frame. I'll go to the 3-minute chart because that's what myself, I'm very, you see today. Again, you see? Wow, bye-bye. So what is happening here? Bye-bye. You see? It's going where? So as the price going up, sometimes trader will chase it. Do not chase it, all right? Price going up, allow you to pull back and then go up, all right? If you are chasing it, you want to control the risk. So looking on this 3-minute chart, what the price was doing before, you can see that the price was consolidating on this 3-minute chart, okay? The price did not hide it. That's what we are looking at. That's what we must watch, okay? All right? Now it gap up, okay? If the price gap up like this on a lower time frame, another strategy trader must pay attention to. The first candle, watch the first candle. Very important. It gap up. So in this 3-minute chart, we have this first candle here. The high and the low. So you can see that price went up a bit and pull back and retest the high here. And this is where you look for opportunity to buy if you want to be aggressive buyer. So, for instance, now as it's going up like this, if it did below the high of the first candle after the gap up, you need to stop being bullish. All right? Why? Because the price has failed to display a new high, or the price returns below, okay, the prior high. All right? Let's see how long we have been recording this video now, because this video is very important. A lot of traders spend a lot of time trying to understand the trading volume. And normally, I shouldn't reveal this to traders, but I think it's very important to share this information in public place so that other traders may also, so that other traders do not mess up our trade. That's what I want to say, all right? Okay. All right. I want to bring on now another financial instrument. This time I'll bring on Apple stock. Again, I will stay on a 30-minute chart, okay, for day trading purposes. All right. Let me know something down here first. All right. I'm still here. All right. Okay. For Apple stock, I'm going to the 30-minute chart. We are looking for above average. You see, there was one here. So you can see that the volume here was in this region here, below my moving average 50. Now we have this surge in trading volume. Okay? At that point in time, we will highlight the high and the low of this candle. But you see that that was on the closing bell on the 13th of December 2013, you see, when the market was about to close, all right? At the beginning, okay, that was on the closing bell on the 12th, in fact, on the 12th of December 2013, as the market is about to close, you see here. But here it is, there's a new one here. All right, you see here, the volume here was below my moving average 50. Now we see this nice. So we want it to be very tall and big, more than 1 million shares. See here, this is 2.2 million shares be transacted. Okay, today. That's today. You see here, this candle here. So game on. So as I demonstrate to you here how to use the trading volume like God, game on. All right. That's it. Is there anything else you want to know? That's all you need to know. So this is the high of the first candle on the 30-minute chart. That's the low. And we are stuck below the high of that candle. All right? So if it fails to go above the high, it's telling us that the bullish, the bearish momentum, okay, is increasing. If it goes above the high of that candle, it's telling us that, okay, the bullish momentum, okay, is increasing. All right? So you say surge in trading volume, above average trading volume. We want to know whether these are buyers or sellers. How do we know? We'll highlight the high, the low of that candle. The candle must close first. This is very important for traders because sometimes we see a trader will see the surge in trading volume and they don't wait for the candle to close. Wait for that candle to close, whether you're on a yearly chart, monthly chart. Suppose you're on a monthly chart and we are on, like today, on the 16th of November, and the candle is not yet closed. Do not apply that strategy until, okay, the candle is completely closed, all right? Closed, completely closed, and a new candle has started. Talking about the price bar, okay? The candlestick bar right here. So this candle here is closed because the market did open here and the price went up to this level. Now it's closed. The strategy is now activated, all right? Now we can go now to a lower time frame. So why do we go to a lower time frame? We don't make our decision on lower time frame. We use the lower time frame to zoom into the price, to look what is happening right now. So you see why the high frequency traders are trading on a 10-second time frame, because they want to know exactly what's happening right here, right now. They want to trade fast. They want to take advantage of the short-term, okay, price action. All right. So this is my drawing on the 30-minute chart. You can see my two blue lines here. So the price stay below the high of that candle. It's telling me that it's a little bit bearish. All right. So but now what are we looking for? Okay. If you want to sell, for instance, on this 3-minute chart, right now the common sense trend line on this 3-minute chart is kaput. Some aggressive trader will sell at this. It's not too bad, placing their stop loss above. Okay, that's not too bad because The price is out of this bullish channel on the 3-minute chart. All right. But now you see that the price out of the bullish channel on the 3-minute chart. In normal progression, the price will try to retest the channel before going down. Or one can wait patiently. The latest high is this one here. One we allow the price to pull back and display, okay, a lower high. So which means the price will go on the 3-minute chart in a declining channel. Because if it's going to go down, it will go down in a declining channel. So we will look for opportunity to sell on the edge here. As I explained to you before, to trade like God, it's about being a multi-talented trader. So if you stop like this, because you see the setup on the 30-minute chart, it's not too bad, but it's not the smartest way to do it. So let's push our curiosity a little bit far. I'm going this time on the 3 days charts. All right. The trading software that I'm using here is TC2000. I'm going to remove some of my previous drawing on this chart, and we're going to take it step by step. All right. I hope I'm not removing my line that I've drawn on the 30-minute chart. These are the line that I've drawn before. Okay. And I will also remove this. This is Apple stock on the 3 days chart. Okay, let's see. Where are we now? Okay, so are we at a resistance level? Are we in a resistance zone? Okay, on a 3 days chart, I start drawing some line to see what the price is doing here, what's going to the mind of professional traders. I can go to the weekly chart. I decided to use the 3 days chart this time, because some traders never seen the 3 days chart, so here it is. And the professional using it. As you can see, the line that I draw lately is very close to where we are now. See, it's a support level. See here, the price went down, found a support here, and went up, okay? So we are in a support zone. But the setup that we have seen on the 30-minute chart is telling us that it's bearish. But on these 3 days charts, we can see that the price went down. You see, it went down, and now it's above that, the latest support level. I'm going to color it now into red, so you can see on your charts. Are you with me? Okay. If it gets in too much for you, breathe in and then breathe out. Okay, and okay. I want you to pay attention to this candle here, the small candle on top of the red line here. Can you see on the chart? I'm going to draw another line here. It's a 3 days candle. I want to draw a line, okay, at the high of that candle, because it's also very close to where we are now. So I want to monitor what is happening there also. Okay, you see now? So I will color the second line into green. Remember, the first one is a red line, it's a support level. Okay. Alright. The red one here is a support level. Probably went above it, retest it here, found the support, ran away, retest it again here, and then went up. Can you see it? Okay, if hold on a second. Well, let's zoom into it so everybody can see it. Okay, I'm talking about a red line, okay? Went up against the support level. So we are very close to that level. And I also draw another line, which is the green line. It's this candle here. Can you see on the chart? I'm going to place a vertical line. This is a small green one here. The green line is at the high of that green candle. Okay, this one here. All right. Now I'm going to go back now to my 3-minute chart. Hopefully I will see those lines on my chart. I can't see any of them on my charts. Okay, no problems. How do we find them? Let's go to the 10-minute chart. Now on the 10-minute charts, you can see the green line. The green line, you can see, is the high of the 3 days chart that I've shown you, the high of that small green 3 days chart. So the price at above that high, so it's in a bullish zone, all right? But according to our volume analysis on the 30-minute charts, the price is not yet above the high of the first 30-minute chart candle, all right? You remember? So we know that the green line is the high of the 3-day candle, and also the red line is a support level. So now you see it, all right? So though we see the setup on the 30-minute chart, we do a little bit of verification. We went to the 3-day chart. I may have gone to the 4-day chart. I may have gone to the 2-day chart. I may have gone to the weekly chart. I may go to the monthly chart. But it's up to you. Nothing should stop you. It's your charts. You should be able to see up to the yearly chart. That's my recommendation to traders, okay? Because if you don't see what's happening on the higher time frame, it's like you are trading a portion of the price. You think it's going to go down, but it's going up. But because of what you are looking at, you thought that it's going down and you sell. Okay, you didn't make a wrong decision, but you make the decision at the wrong place because you were looking at one piece of the information. All right? Just a part of it. You are watching a part of the whole price action. So you thought that it's going to go down, but it's going up. Or you thought that, all right, it's going to go up, but it's going down because you see part of the picture. Or you were busy looking at the indicators, the moving averages, the RSI, the MACD, the stochastic. You were busy looking at the indicators. You were trading, all right, okay, the indicators. Sometimes the problem is that one is trading the technical alone. One does not pay attention to the fundamentals. All right? So the fundamental can screw up your trade, or the trading triangle. Talking about the trading triangle, one must go to www.dayprotrader.com, click on Market Watch, and understand what is the trading triangle. All right? The market first, the sector before the financial instrument itself. The heart of the trading triangle, okay, we have the market leaders, okay, the fundamentals, and the economy news. The market leaders, the economy news, and the fundamentals can quickly change the dynamics of the markets. Though we are trading the market leaders will influence the market. They are like market indicators. Apple is a market leader for Nasdaq 100. Google is a market leader for Nasdaq 100, all right? So you want to know the market leaders of the group of the financial instrument that you are trading, the sector that you are trading. You want to know the market leaders, all right? You are trading forex. You want to keep your eyes on crude oil. Why? Because crude oil is a forex market indicator, all right? You are trading forex. You want to keep your eyes on the Euro USD because the Euro USD is the leading currency pair. All right? You want to understand the correlation between currency pair. One thing also I need to mention here, sometimes traders get into trouble because they don't understand the trading forex, but they don't understand the correlation between currencies. And also they don't pay attention to the economy news. As you have seen recently, it's all about the economy news for the forex, all right? What? Each time there is a fiscal discussion about okay, the dollar will go down first, and then as soon as the discussion is finished, dollar go up. And the traders say, what's going on? Technical, Elliott wave plus fundamental, Elliott wave plus economy news, Fibonacci pattern with the economy news, fundamentals, technicals, combine them, okay? You are trading the volume indicator like God. Don't close your eyes to the fundamental. Don't close your eyes. You want to know everything. You want to take control of everything steadily. All right? If you don't want to dig into it, you say fundamental is not for me, George. I'm a purely technical trader. Yes, I am too. But you want to at least be aware of it. All right? If the company missed their analyst forecast, you want to know. Though you are a technical trader, you want to be aware of it, all right? You are using Elliott wave. You see an Elliott wave pattern, okay. But be aware also about other market participants. These are fundamental traders. The banks, the hedge fund, they use the technical. So do not just disregard other market participants because you understand alien wave like everybody else, more than everybody else, okay? So as you can see, we have found out, okay, this is about chart analysis. We have now found out that, okay, Apple stock is above a key level on a 3-day chart, but our setup on a 30-minute chart, we will wait until the price goes above the high of the first candle, but still now it's having problem here. So if you want to buy, or we will prefer it to pull it back again to the support zone and start displaying higher low. Or we will wait until the price give us, you see, on a 10-minute chart, we didn't have any higher low so far. So the price, we are waiting for it to go above this blue line. So in fact, what I'm going to do now, that a blue line, it becomes very interesting for us. We can color it now into green. So you see now how to trade. Okay, the trading volume like gold. All right. Another thing I need to mention to trader, because you are my friend. All right. Sometimes, okay, ladies and gentlemen, the best thing you can do to a trader is to say to a trader the truth. You are on your own, all right, and you will make the decisions, all right. Losing trade will happen, but one must know how to control the risk. This is very important. The most important thing is that practice will make you better. Practice. Use demo account. Stick to the 5% money management rules. If you have been trading, you are making money, and then you're giving your money back all the time, or you are losing non-stop, all right? Go back to the drawing board. Take it step by step. If trading is not for you, well, do something else. Life is not all about trading. All right, let's check our time again. 32 minutes, that's not too bad. Apple stock couldn't go above the orange line so far, so we're on the 3-minute chart now. Okay, let's go back again to the 30-minute chart where we have started everything, talking about the volume analysis. All right, let me know something down again. Okay. Okay, so here we are. This is where we are. So we are still, if we want to buy, we will prefer to buy above this line here, the orange line. Okay. Let's move on now to another financial instrument. This time we're going to look at the Caterpillar. All right, Caterpillar, the builders, Bob the Builder. Okay. So again, we're going to the 30-minute chart. Here we are looking for a surge in trading volume. So as you can see here, as the market was about to close on the 13/13 of December 2013, we see a surge in trading volume, above average volume, a huge volume, if you like to call it. See here, they were all stuck below the moving average 50. This is, for a while, the volume were almost normal, and then suddenly we see this boom, tall candle. Are they bulls? Are they bears? Okay, let's find out. We know the drill now. Now you know the drill, okay? You know the drill. So, you know the drill now. You are no more a little trader. All right? You know the drill now. Because you are my friend, I'm sharing it with you on YouTube, all right? Okay, here we are. So this is the candle we are watching, the 30-minute chart, the high and the low. If I want to be accurate like Lavoisier, one second please, my friend. By the way, if you like this video, okay, like it, okay. If you don't like it, dislike it, okay. If you want to share it, it's free, share it. Why do we need to share? Why? If you are trading, you should share some information, unless it's confidential material. If you are trading for Goldman Sachs and you share their proprietary trading tool, they will sue you. If you are trading for JP Morgan, you share their proprietary trading tool, they will sue you. You are trading for Deutsche Bank, you are trading for, okay, any big institution or hedge fund, and you share their proprietary trading tool, they will sue you. Don't share anything that is confidential. Sometimes traders think that it doesn't make any sense, okay? Don't do it. In fact, when traders, there are a lot of free trading system and method on the internet, traders when they purchase something, they pay attention to it. They take it serious because they pay a price for it. It means something for them. So they want to learn it seriously. But when they get it for free, they throw it away, they don't pay attention to it, and they go and look for another one, okay? But this one is free, so we can share this video on the web, okay? So now here we are. So we have a kind of, so the pricey. As the market opened today, again this Caterpillar, another market leader for Dow Jones, Dow 30 stock. So the group of 30 stock, Caterpillar is a market leader, okay? So at the close, we see a surge in trading volume. Very often you see that at the close of the market, you see sometimes a surge in trading volume. Just highlight it and wait for the next day. Don't assume anything, all right? It's up to you. If you're an aggressive trader, you want to buy, or you think that it's a buy, yes, it's up to you. But control the risk. I will not interfere with traders' trading style. Never will do that. All right? That's why when we talk about trading TSTW24, SY008, traders ask questions and we get back to them. All right? Okay, here we are. So, close of the market on the 13th. Here we are. Today the market opened, price gap up. And that's the first candle today. So, but we have to understand that that was at the close of the market. This is the bar that I'm watching because this one happened today. So I'm watching this candle here instead of this one. All right. So we are in a bullish zone because we went above it. The first candle of the day. This is another trading strategy that we can discuss. The first 30 minutes candle. When the market open, you can also highlight the high and the low of that. That's a different trading strategy, all right? So let's go now to the 3-minute charts and see what the price is doing. So you see on the 3-minute chart, but I prefer a trader use a higher time frame, like 30-minute chart at least. You see here on the 3-minute chart, there's a surge in trading volume on the 3-minute chart for this candle here, and then from that point, the price gap up. As I explained to you, when the price gap up or any time frame, the first candle, you can highlight the high and the low of that candle. So remember what I said to you about Apple stock. This time we are talking about Caterpillar stock, all right? A market leader for the Dow Jones index, all right? You see now? Are you with me? Okay, let's move on. Because you are my friend, let's move on. So now the price is above, okay? That's first candle on the 30-minute chart where we draw our two horizontal line. Game on. So you don't want to be bearish in this condition, all right? But remember what we have said, trading like God is about, okay, being a multi-talented trader, all right? So we can do the same thing that we have done with Apple stock. This time, let's go to the weekly charts, okay? So today, don't think that it's only 3-minute chart. Where are we now? Where is the price now? This is about navigation. Do you use Google Map? All right? Okay, you want to take a taxi. You want to know where are the taxi drivers? Where is their office? All right? So you can go use your Android phone and then go to Google Map and say, nearest taxi, okay, in which area in London? In Chelsea, for instance, or in Paddington, or all right, or in Baker Street, what? In your area. So the Google Map will zoom into it, and then it will give you a list of the nearest, all right, taxi, isn't it? All right. All right. Or you going somewhere, you've never been there, or you go to Paris, or you go to Los Angeles. And you don't know the area, you use a map, okay? The map will allow you to navigate through the city without getting into trouble, all right? The same thing when we are trading. So when we are using, for instance, Google Map, the first picture, we can zoom into it, zoom into it, zoom into it. So you see the bigger picture first, which means all the streets, you see it, but you can zoom into it, zoom into it, zoom into it, zoom into it, to the area where you want to go, yes or no? All right, try it, see. The same thing we are doing with trading. When we are going to a lower time frame, we are zooming to it, zooming to it, zooming to it, zooming to it. I say, yeah, there's a McDonald's near the place that they described to me. Yeah, this is the place where I want to go to, or this is the postcode, this is the street, exactly there. We can zoom and zoom and zoom into the street itself. All right? one thing that is happening, traders are zooming to the price, but they are not, okay, they are not seeing the bigger picture. All right? Is there a river around? Is there a lake? Traders that have been in the military know how to use the map. The same thing we are doing with the chart. So we see now the 30-minute chart, we want to see the bigger picture. Where are the resistance level? Where are the resistance and the support level? These are the key to successful trading. That's it. All right? Professional will look for opportunity to sell at the key resistance level unless the price break above that resistance level and find a support. Full stop. Professional will look for opportunity to buy at the key support level unless the price dip below that key support level and find a resistance right there. So this is what we want to do. So from the 30-minute charts, you see now, are you with me? This is about trading, learning to trade like a pro, adopting the mindset of professional traders. All right? Instead of using the technical alone and just being, I seen a trader one time, I see somebody, and I asked him a question, and a young man, I know him, and I asked him, why are you sad today? He said to me, it's the market. And I said to him, all right, I can help you. But he doesn't know that I trade, okay? So he said to me, no, you can't help me. I said, all right. But the guy was so miserable because he got a very bad day, which means emotion was involved. In trading, we don't want emotion at all. That's why now the high-frequency traders and the big institution has replaced human being by machine because they know that emotion can influence trading. When you get emotional with trading, why traders get emotional with trading? Okay, sometimes you made a mistake or you missed something. A losing trade did happen. Whenever you are placing a trade, two things can happen. It can be profitable or you can lose. But you can control the risk. If the trade happens to be a winning trade at the beginning, you can move your stop loss to break even, which means zero loss, zero win. But suppose you want to sell. So you look at the chart, the first thing you want to do, you want to sell, okay? And then you look again, and then you change your mind, and then you buy. As you buy, you see the price going down. This will affect you, yes or no, because the first thing that comes into your mind, your first analysis confirms to you that you should sell. But then you doubted your analysis because you were not sure whether you should buy or sell. That's what's happened. Okay, so now you decided to buy. As you buy, the price went down. You are emotionally involved. Okay? Or you enter a trade, the price ran very, very fast, you got 100 pips within 10 minutes or within 30 minutes, all right? And you couldn't believe it. But you didn't control the risk, you didn't move your stop loss to break even. And the next thing, some economy news out of nowhere, you see another candle that cancel everything. That can affect a trader, all right? That's why I recommend to traders that you on your own, you're going to make the decision, you're going to control it, you're going to take the profit, you're going to close that trade, you're going to reduce your exposure. So when there are major economy news that are coming out, you may decide to close some trades, at least if you have 10 trades open, you don't want to leave them all exposed there, and they all went against you. Or you don't want to have your portfolio completely bullish. If the market is bearish, you're going to look at red, because your portfolio is just about buying. I'm talking about day trading and swing trading. I'm not talking here about long-term investment. That's a different matter, all right? And you're going to be thinking, why? Do you have any insurance in place? What they say to me is that when you know that something is going to fail, or something is poor quality, what do? You insure it. The same thing we do in trading. If you are not sure, control it, hedge it, manage it. All right? This is the secret of insurance. People will go and take the biggest insurance because they know that this thing is not going to last, to protect their investment. So when we enter the trade and the trade is getting, we have a bit of profits, we can move our stop loss to control the risk. All right? Or we can take profits. All right, if we know that it's going to be volatile market, or we know that there is this discussion about the fiscal discussion in the United States, we don't want to expose ourselves all over the place, and the market is going ups and down, and we are taking out. So now we are on the weekly chart for Caterpillar stock. I've been talking to you now for 45 minutes. What are we looking for on the bigger picture? Where are the resistance level? Where are the road blocks? Where are the traffics? We want to go to work on time. Okay, where is the traffic? Okay, so we don't get into traffic, which road we should avoid. This is the exercise that we are doing here, talking about trading using the trading volume. So on this weekly chart, what do we see? The price consolidating. It went down and went up to this resistance level, the blue line, pulled back to the black line here, went back to this level, pulled back. So the price consolidating. So in this scenario, on this weekly chart, there are some level we must watch. You see this candle here. Though I can move my blue line a little bit down, see here, but we don't want to ignore, okay, the opening price and the closing price, okay, the high, the low of the weekly candles. So if we draw another line, or if I move my blue line to the opening price of this red candle here, that's very close, isn't it, to where we are now for this Caterpillar. If I move it down, because these are key level, you see this candle, the green one here, I'm moving now to the closing price of this green candle here. That's exactly where we are now. So we are at the closing price of this candle, weekly candle, all right? This level are key level. That's where we are now for Caterpillar. I will color that line now into green. Now, we see the bigger picture now. The price is consolidated. All right. If it goes above the peak line, the consolidation zone, in fact, the upper level of the consolidation zone is the pink line here, which is in the zone of $89. Okay, that's the consolidation zone. As you can see, this is the market pattern. This is not a price pattern. You don't want to violate the market pattern. Professionals, they know that there's a market pattern here. But as the price going into the ultimate, okay, resistance level of the consolidation session, there are other key levels that we should not ignore, which I'll show you now. And we are now at one here, the closing price of this green candle. But sometimes when traders are trading, they don't know that these levels are key levels, and they just ignore them. But professionals are paying attention to those key levels. Let's go back now to my 3-minute chart. Hopefully we'll see my peak line. Here we are, you see. That's the closing price of a weekly candle. So you see, it's not by mistake that they gap up, run all the way. Professionals know that this level is a key level. So if you want to buy here, because there is a key level here, you want to buy, what do you need to wait for? Wait for it to go back above it. The ultimate high today, as the market did open, we are now on a 3-minute chart, is this point here. All right, so now, if it's going to go down, it go down in a declining channel. All right, it makes sense? So you may say to me, George, thank you very much for this video. Has been very, very interesting, but I do not trade stock. I trade forex, George. Why should I need to do? We don't have a trading volume for the forex market. If you are trading commodity, yes. So you say to me, George, what should I do? What I say to traders about the forex, if because we don't have a trading volume bars, we can use the MACD indicator. That will be a different video. I'll think of it whether I want to share this information with you or not. But I'll leave it out for now. Okay. As we are concentrating on stocks today. You see now? You want to see more stocks? Okay, let's move on. We stock, okay, Microsoft is a very popular stock that traders are trading. Let's look at Microsoft stock. We go to the 30-minute chart. So here we are. So we have a bit of a dilemma here because we have too many bars, you see. If you see too many bars like this, the first one, the first bar, that's what we are, look at this. They are almost equal, isn't it, here? They are almost equal here. So I will pay attention to the first one here. So there was a first surge in trading volume. In fact, there was this one, but not very tall. This is quite high, okay, 5.7 million shares, okay, being transacted for this Microsoft stock, okay. That was on the 13th at the closing bell on Friday. That's closing bell, watch it. Last 30-minute candle before the market close, okay, as the market is closing, the last 30 minutes, which means from 3:30 p.m. to 4 p.m. Eastern time, you want to watch that candle and see whether there's a surge in trading volume, and don't assume anything. The strategy that we have discussed, we will put into use. As always, like now, we are trading, if you are trading Microsoft, okay, all right, or you are trading any stock, you want to pay attention to the market leaders. This is about market watch. Go to www.dayprotrader.com. All right, how do we use the market leaders? This is about a trading triangle. Check on YouTube how to use the trading triangle by Joy Trio. All right, so this is the first one here. So pay attention to it. We are above it now. Okay, we'll follow again the same procedure, trading like God. We want to see everything like an eagle. All right, clearly from the top down completely or thoroughly. All right, see through it, look inside it. If you understand alien wave, check the wave patterns, align it by the bottom lines, support, resistance, market patterns. So here we are above it now. We can do the same thing now. This time, let's go to the 2 days charts. I'm using a different time frame today because some traders never been to those time frames. That's why I can use the daily chart. Let's go to the 2 days chart, okay, for Microsoft stock. All right. You see, if you see there's the price. You see there's a resistance here. The pink line you can see, okay, for Microsoft, it break above this level. Talking about breakout trading, ladies and gentlemen, go to www.youtube.com/dayprotrader.com. No, go to www.youtube.com/Joe Trio, the Joe Trio channel. Check the video that we call breakout trading. What is a valid breakout? All right. Sometimes you are trading, you see sometimes traders rushing, aggressive traders, seeing the price breaking a resistance level, they see it's a breakout. And they push the price aggressively. You think, who the hell is these people? All right? And because these people do not know what is a valid breakout, okay, and how to, okay, analyze or identify a valid breakout. So go to www.youtube.com/, okay, Joe Trio. Check the video that we call breakout trading, or check on YouTube, search on YouTube breakout trading by Joe Trio. So here we are, the price above the pink line. A breakout will always take place at a very important key level. All right, I don't want to go. I don't want to deviate from the core discussion today, which is volume trading. All right. So I'm not going to go deeply into it. So we are above the pink line, all right? Okay, so price went away, all right? So we're on a 2 days chart, so there's a key level here, which is the peak line here, the price is above it. That's all I can see on this 2 days chart, all right? Right now, okay? If I want to know more, I can go to the weekly chart, monthly chart, quarterly chart to see whether there is another resistance in this zone. All right? Okay? So let's go back again to the 30-minute chart, talking about, okay, how to trade the trading volume like God. All right? So on the 30-minute chart, we are stuck here at this, above that line. So zoom into it, we go into the 3-minute chart. So you see the drill now. All right, you see the drill. as always, one should not trade on one single time frame, on a single time frame, which means you see a surge in trading volume on a 3-minute chart like this, trader will start saying this is bullish, they start buying. Sometimes it may work, okay? It may work. There you go, yes. But it works, but you didn't understand why it works. Probably the price was at a valid support level, and it works. So you build a trading system that whenever you see on your 3-minute chart a volume pattern like this, buy. It's a crazy trading system that is not based on any foundation at all. It's not based on the market pattern. It's not based on the multiple time frame trading method. It's not based on any market principle. A lot of useless trading system has been pushed into the market, even been made automated, creating too much distortion. Who are these people creating this sort of, all right, sort of a trading a system of trading algorithm? All right, now I'm having fun of them a little bit, but I'm not having a go at other traders. They can do whatever they want to do. Okay, it's their money. Okay. All right, so here we are. You want to see another one? Okay. Let's bring on Intel. Hopefully we'll see another volume pattern. Intel is also very popular. As you can see, I trade American stocks and I trade Forex. All right. Here we are. Though I'm in London, I trade American stocks. I like the American stocks. Okay. In fact, many TSCW traders are Americans. So, okay. So, let's go to the 30. We are on a 3-minute chart. You can see this surge in trading volume on a 3-minute chart. But no. Don't do it like that, okay? It's like trading like high frequency traders, okay? Which is a different matter. I will record another video how to use the trading volume like high frequency traders. That will be another, okay, another video for our channel, High Frequency Trading 2.4. Where I'm discussing and sharing with traders what is happening in the high frequency trading world. My approach is not to ban these people, as some traders say they should ban them, they should ban the bearish traders, they should ban this, ban that. I'm not into that banning this. These are independent traders, and they can do whatever they want to do. But there is a lot of distortion, so we will try our best to help these algorithm developers so they can develop okay a better algorithm that are not distorting the market. That will make more sense. Okay, now, so we see now, so we go to the 30-minute chart. This is Intel stock. Again, we are looking for a surge in trading volume. You can see here at the close of the bell at the beginning of the day on the on the 13th of beginning of the day, on the 13th of Friday, the 13th of December. A lot of traders do not trade on the 13th on Friday 13. They are afraid because there are all sorts of belief that the 13 is a very bad thing. Well, if you believe that is a bad number 13, it will be bad for you. If you believe that it's a good number, it's a good number. For me, I think it's a good number because we have a 13 specific stochastic pattern, 13 Elliott wave pattern, all right? So we have, okay, a lot of things that is good about number 13. So don't concentrate on the bad stuff. So on it, so I need to mention to traders, whenever a Friday is 13, notice that very often, some traders will not trade. And most of the time the market goes down. Okay, Friday the 13th. This is I don't know. All right, a belief in the market. Okay, so Friday the 13th, this was happening. So you see, as the market was about to open, see here, tall candle. I want to concentrate on this one here. Okay, see it's above. This is not very tall, and the volume is 4.6 million. Not too bad, and we can apply the same strategy here. All right, the high of that candle, roughly I'm drawing it like this. Normally we should use a proper horizontal line to draw it properly like Lavoisier, accurately, without going to the left or right. All right. Okay, so you see now, let me adjust it carefully, because some traders will contact me and say, George, it wasn't straight, okay? You'll be amazed what kind of emails sometimes I receive, but understand, okay? All right? So here we are. So we are above that tall. You see here? Again, yeah. We apply the same method, okay? All right? This time, let's go to the monthly chart. So on this is our setup on the 30-minute chart. We want to navigate, all right? So the bigger picture, the key level, the support, the resistance level, okay? This time, let's go to the monthly chart, okay? Where are we for this, okay, bullish cow, okay? So we are now here, so we can start drawing lines, okay? Not only horizontal line, we can draw trend lines. The first line that I'm doing, I'm drawing this point and this point. So as you can see, the price is D below this trend line and retest it here. Boom. And the final resistance on the monthly chart. The candlestick pattern here, doji, followed by a bearish candle, trader responded and sold it during this month. This is a candlestick pattern on the edge. Beautiful for swing traders. Candlestick pattern on the edge, and they took it down. All right, a little bit. But as the price was going down from this point after retesting the bearish, this trend line here, it did not display a new lower low. This is about analyzing the price, keeping eyes on the price without blinking. So there was this low, but as the price found a resistance here, traders sold it, but the price did not display a new lower low. Now at this point in time, we will think, okay, we will not, okay, assume that definitely it's bullish, because sometimes the price will pretend to go up only to come back down. So what am I doing now? You can see that the price confined between these two lines is oscillating between these two lines now. It's almost at the edge of this level here. Because we're on a monthly chart, there are other key levels, which are the high, the low, okay, the opening price level, and the closing price on the monthly chart. So these are, you see here, this candle here, the opening price, that's where we are now. This candle, the small one here, this one here, the opening price. What I'm going to do now, this is about analyzing, okay? Though we see our setup, this sometimes they get into trouble because this is what's happening. People go and buy a trading system or they buy a trading tool, but they don't understand what is happening. If you understand it, as I explained to traders, you want to build your own trading software, okay, your own trading algorithm. The high frequency traders that are sitting and monitoring a computer understand the algorithm and they know how the algorithm should work. Some of them do, some of them do not. If you have purchased it, okay. The black box, you want to understand how the market functions, so you do not keep pushing it, and distorting the market because you don't know anything about the price, anything about the market, okay? So I will color this line now into red. That's the opening price of this candle. It's a key level because you're on a monthly chart. That's where we are now. We also know that the price is oscillating between this candle. So if you find a support, we need to watch this one, this level here. But as the price is going up, we must watch the key level on the monthly chart. The high, okay, you see the high of this candle here? It's the key level. The closing price of the green one is the key level, all right? The high of this level on this candle here on the monthly chart is the key level. So we are now at the opening price of this candle here, the month of November, the opening price. That's where we are now. Now let's go back now to the 3-minute chart. You see now? I think I've said enough today, and we are speaking now nearly an hour 4 minutes. I'm going to wrap it up. Okay, so that's where you see the red line now. Okay, it's a key level. You see how the price is acknowledging that level. The professional know, they know. See how it's stuck here? All right. See now? Support, resistance, okay? Market pattern, that's all. He ran fast today on the 16th, can you see? 16th of November 2013. The time in London now, as we are trading this. Okay, here, 16th of November. Time in London, 54 minutes past 3. New York, 54 minutes past 10 now. See now, 16th of December 2013. Can you see on the chart? Right here. Now, as you can see, price ran fast at the beginning of the market on the 16th. Where it went to, price always moving from one level to the next level. So they just bring it to that high now and see, it's testing it. This is what's happening. It's consolidating now, it's testing it. They know that it's a key level, and if you want to buy, it's crazy to buy it like this. Okay, in fact, it's crazy. Those who bought it here is not to buy because it went above the blue line, you see here, and pull back, but it's near another resistance level. Careful, okay? So this is why we are saying to traders, you want to, for the trading day, very simple, whether you are using TSCW24, SYZ08, find a setup first. Don't go to the first best time frame, play with the TSCW24. Don't go to the signal time frame, take a signal. Look for a value setup, analyze it, check the fundamental, use the trading triangle. That's why we have specific website where trader will go and watch the video. All right. So now you see the setup. Okay. So suppose you didn't know that there was a resistance here. You receive a bullish signal, or you receive a bullish signal here, or you see the price going up and you buy here. But you didn't know that this red, there's another resistance very close. This is the danger of trading on a lower time frame or making a decision on a single time frame. Ladies and gentlemen, today we have covered this topic, how to trade a trading volume like gods. I explained to traders that trading like God is about being a multi-talented trader. As we are applying on one trading strategy, we do not want to forget everything else that we have learned. So when we are applying the Fibonacci pattern ratio, or we are applying the Elliott wave patterns, or we are using a fractal trading method, or it's just a MACD trading strategy, or stochastic trading strategy, or we are using the stochastic patterns, we don't want to forget everything else. But the bottom lines, how do we achieve consistent winning trade? How do we trade like God? How do we make accurate decision consistently? How do we make less mistake? How do we cut down our mistakes? We want to work with market patterns and the market principle. There are only three market patterns: the rising channel, the declining channel, okay, and horizontal channel. Never make a trading decision or investment decision on one single time frame. Use a multiple time frame trading method. These are the foundation on which you can build a solid trading method. Next, do not use technical alone. Combine the technical with the fundamental. Go to Google Finance, go to Yahoo Finance, check the fundamentals, okay? All right? You see a setup as we have seen on a 30-minute chart. This is a trading strategy. Sometimes traders will watch a video like this, and then they quickly open a chart and place a trade, they lose a trade. They go back on YouTube, they mark the video down, all right? Or they may send me a crazy email and say, George, this method is useless. Well, how do we validate a method, all right? All right, how do we validate the method? We check whether the method is aligning with the market pattern or is incorporating the price at least and is not violating the market principles. This is how we validate a trading method. Today we were talking about the trading volume and trading strategy. In this video, we were starting our setup from the 30-minute chart, looking for a surge in trading volume. Then we highlight the high and the low of the first candle. The candle must close. This is a very, very important condition. The candle must close. The mistake that a trader may make is to go now on a time frame and see a tall candle, but the candle is not yet closed, and the trader will apply this strategy. That's completely wrong. Do not get involved. Candle must close and a new candle must start. You are day trading, pay attention on the time of the day, the gap period. What is the gap period? All right? You want to know. It's not every hour or every minute of the day that you should place a trade. You see the setup, yes, the setup is great, but the time of the day is not suitable. Stay away from it. Don't trade it because you see, okay, a Fibonacci pattern. But if you see a Fibonacci pattern, but the market environment is not suitable, think of the farmers. You want to sow at the right season. So the first 2 hours when the market open, these are the best time. And maybe, okay, the last hour also, all right? But this is why we are teaching to traders, okay, all the time. As I say to you, the practice. We have looked at, okay, Intel stock. we use different time frame, all right? You are trading Intel, you want to pay attention to the market leaders of Intel, the sector, all right? Very important. Use the trading triangle. Use at least, okay, a kind of a money management in place. Don't go because you have a lot of money, just throw into the market. The market will take it. If you fight the market with money, the market will take everything. And you'll be looking back and say, how stupid, how did I do that? Okay, you don't want to be thinking of it, all right? You want to control it, you want to be on top of it. Don't get emotional about it, all right? Don't fight the market, flow with it. As I've said to you, we shouldn't use the technical alone. I've talked to you now nearly an hour. Let's go now to Google Finance, and I'm going to put in now the epic of Intel. Okay, we want to see at least. We want to demonstrate to you how you want to check it. Okay, so I'm just going to put here. Okay, Google Finance. Okay, so suppose we are day trading today. Suppose you are here trading Intel. Okay, and you see a setup. Okay, you want to buy. As you remember that, okay, George said that, okay, we must check the fundamentals. So you're wondering, okay, what should I do? Okay, I'll show you now before we close this video. Show you now. And so you know how to do it, and you trade like God himself, all right? All right? Okay, Google Finance, here we are. Going to bring it now, and we'll look at it. And we go through it step by step, okay? So you see here you see Google, and then you see search finance, okay? Now, and I'm going to put the epic of Intel. I can put the epic of Apple, ENTC, India, November, okay? Or you put Intel, and you'll see here, you see, ENTC, India, November, Tango, Charlie. Here we are, click on it. Okay, the actual price, $24.55. It went up today, okay? Okay, 1.03%. So this is okay. You see here, and the chart is here also. All right, you can play with the chart if you want to. All right, but here we are. So you see here on your right hand side, you see news, Intel Corporation. All right, 7 hours ago, you see there was some news relating to Intel, and the economy news, as I said to you, talking about the trading triangle, can change the dynamics of the market. A lot of professionals will tell you that. Okay, you see here, again, they put Google, some news related to Google. Why? Because Google is a market leader. It's also a tech stock. So you see that the stocks that are connected to Intel, these are stocks, you see also, don't ignore them. You can just, you want to know, if you're not a fundamental trader, you want to know at least what's going on to the mind of these fundamental traders. You see now? And you can just click on it and read it. All right? You don't have to, if you're a technical trader, you don't have to spend an hour or so. Or the hedge fund have another team for, okay, fundamental trader that will analyze anything and refer their reports to the, okay, technical traders, okay? Okay, so you can read it now and, okay, all right, see what's happening here. You see now? All right? Okay, you can read it, okay? Just know what is happening, that's all. What is happening, you want to know, all right? If you want to check the fundamental, you click on financials, here, financials, all right? All right? The balance sheet, the cash flow, and you take it from there. You want to dig into it, do your due diligence. That's how you do it. All right? I hope I've said enough, okay? So before I close the video, let's go back again and check what's happening with Apple stock, okay? All right? Apple stock, you can see the orange line went above it, just stuck there. Not much going on. Let's check what's happening with McDonald's. Okay, again, you see, it's now, it was below it, now it's going back above it. All right, just be patient, okay, patiently, okay. And all right, we have seen Intel already. and Caterpillar, Epic CAT, Charlie Alpha Tango. Here we are. Getting stuck. It went above, you see the two horizontal line on the 30-minute chart. Now this is the resistance, do you remember? Okay, that's why it's stuck now. Alright? It makes sense? It's also powerful. I hope you have learned something from this video also. Okay, and we put it to use to make excellent day trading, swing trading, and investment decision. This is about how to trade the trading volume like gold. And until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.